If I just draw a link, although I know that data sets are not comparable, but some of the takeaways that came from the PLFS, one of them was that the pickup in reliance on agriculture, which is, picked up again in the last couple of years, still remains above, the last, say, 3 years back. Similarly, jobs or reliance on the informal sector remains high. So those sort of, indicators suggest that even while the economy is starting to chug along, perhaps at a better pace, the labor market is still weak.
I will say that the labor market tells you a story which is more comprehensive than any other indicator of the economy. Okay. A household survey that the PLFS does, or that CMI does, the CPHS of CMI, covers the entire country.
Okay.
So whether it is informal, formal, organized, unorganized, all those workers stay in houses. And we do a household survey. So the most comprehensive indicator that you get for the Indian economy is one which is based on a very large sample, which goes across to all segments of the Indian economy. And that, whether it is PLFS or CPHS, shows that the recovery has been sluggish. Now, what is happening is that the informal sector is not growing fast enough. It has taken a big hit. The formal sector, the organized sectors are doing well, and therefore you see the stock markets booming, the Indian listed companies having record profits. So the organized sectors are doing quite well, but the informal sector is not doing well, and therefore people are moving into agriculture, and that's actually, we all know, is disguised unemployment.
Do any of these indicators give us a sense of wage growth, Mr. Vyas, at all? In developed countries and some of those economies, you do get a sense of how wages are growing or not growing. In India, what is the best way to judge that?
We do have wages data. So when we go and collect data on employment, we also get data on wages. We do know whether households are earning income from wage labor or from transfers from government or private transfers or from business profits. So we do collect a lot of information on wages, and what comes out from there is that the wage growth is as slow as the growth in employment. So we are not doing better on wages while we are not doing good on employment. So households are taking a hit on both fronts, wages and employment.
And on inflation, so I was linking it to inflation. One would, in theory, one would say if inflation picks up, second round effects could flow through via wage inflation. But as yet, there is no indication of that happening, which means it's a double whammy.
More than that. So we have employment not growing, wages not growing, inflation rising, and now interest rates rising.